Hi folks, Matt here. Hope everybody's having a great day. So if you've been following any of my content, you'll know that I rarely ever do market commentaries, but I thought with some of the volatility, I'd kind of give you my 2 cents and some of the things that what's kind of going through my head. So anyway, I know anytime there is market volatility, and especially when the media keeps kind of pushing a lot of this, it brings back memories of 2008, which nobody ever wants to go through again. But I think we've got to put some things into perspective. I think the first thing is that if we look at year to date, the S&P is down about 13%. But if we go back to even just looking at last year, the S&P was up almost 28%. So really, we're still in the net positive if you want to look at it from that perspective. Similarly, from 2008, the market is up over 3,000% since the very bottom in March of 2009. So we've seen growth through all that. And this is the idea of looking toward the long term and always educating, being educated on how we need to be invested for the long term. When I first got into this business, I remember I had a wholesaler that kind of used to take me aside and give me some pointers as I was trying to build my business. And the one thing that he told me that always stuck with me, he said, Matt, your main job as an advisor is to manage your clients' emotions. And that's what we spent a lot of time doing. And if we look back at just, the last just what's happened in the last couple weeks, I've only received 2 calls out of over 100 clients with concerns saying, hey, should we move to cash? Should we get defensive? Those type of things. The rest of my clients all understand because we've been through this drill and they know that I'm looking at the long term. I also will reassure people too that my chief investment officer, he's always looking at different indicators. He's felt over the last couple months that the market has been overvalued. And actually in 2019, we shifted all the clients to approximately 17% cash. So we're mitigating some of the risk that's out there. So I think what my key point is just to keep in mind that this is a long-term play. These things happen in markets, but when we put it into perspective, we'll see we're still net ahead. And as long as we maintain a long-term strategy, we're going to be okay. Hopefully your advisor is reassuring you that way. If not, feel free to go to our website, DiFrancesco.com. Up in the top right-hand corner, you'll see a schedule a 30-minute intro call. I offer this free, no obligation, a chance to just talk, look at your situation, see if there's any way that we may be able to help. That's our value to you. So anyway, let's turn off the news. Let's not take a lot of these scares too much to heart. Let's always just be safe and cautious, but let's also always be looking at the long term. And hopefully you have somebody that is guiding you in that way. And if not, give us a call. We'll be more than happy to help. So with that, take care. Let's have a great day. And I'll look forward to talking to you guys in our next installment.